are there any other presidential hopeful proposals that have to do with taxes that are germane and our audience should know about?
Oh, my heavens. So the Democrats want to raise taxes by $5 trillion. They want those taxes to all be on investors. Okay. And the reason I say that is because typically people who make less than $400,000, which is their threshold, are not major investors. Most of their money goes to spending. If you're making under $400,000, you can easily spend $400,000 a year.
Oh yeah.
Okay. That's not that hard, right? Especially in today's world. So what that means is it's a transfer from high net worth individuals who invest their money in long-term projects like real estate, like energy, like business. And it's going to be a transfer to people who spend the money and they're going to spend it. Okay. So my prediction is that if the Democrats get their way, we enter into a long-term period of stagflation, high unemployment and high inflation. Because if you transfer $5 trillion from people who aren't spending it in the first place to people who do spend it, you've got $5 trillion of new money going into the marketplace. Now, it could depress asset values. So that could be good for investors, okay? Because you don't have as much cash available to the, I'll call it the investor class, to go into real estate. If that's the case, then, I mean, you have $5 trillion less, right? I mean, it's not a huge portion of the market, but it's big enough. If you take $5 trillion out of investment capital, then that would put a downward pressure on asset prices, which would include real estate.
We're talking about potential changes to the tax code. It's always a germane discussion because taxes are the biggest expense in your life. We're talking with Tom Wheelwright. He's been talking to us about some of the proposals that presidential candidates have here in a campaign season, and whether these things become true or not. Sometimes it seems like just the fact that they're proposed, or if they get instituted at a small level, years down the road, it can blow up into something bigger. So Tom, tell us more about some of the proposals that are on the table.
Well, so we talked about the Democratic proposals, which also include things like a $6,000 tax credit for babies. It also includes an enhanced child tax credit, also includes some other, there's lots of provisions in there, right? So it's a transfer. It's just a transfer of money from one group of people to another group of people. On the Republican side, we haven't talked about that. Now they want to extend the 2017 Act. They've been very clear that's what they want to do, which is an estimate $4 trillion. So basically you're talking about a $9 trillion swing between the two parties. We've never seen this before, ever in a presidential election. Now that big of a difference, one party proposing major tax increases and major tax decreases in the same election. So it's something that I'm glad people are paying attention to because it's a little overdue in this election cycle. Because really, when you talk about policy, that's probably the biggest policy difference between the two parties.
Now, one thing we've learned over time from talking with you is these presidential wish lists, if you want to call them that, well, these tax changes are things that require congressional approval, and we have a divided Congress currently. So what do you think the prospects are of really any of these things becoming new law?
Well, first of all, remember, most of the 2017 Act expires at the end of 2025. So something will have to be done next year. They don't have a choice. Either that or it just expires. And then we're back to what we had. We have smaller standard deductions. We have alternative minimum tax again. So we get a deduction for state income taxes, right? That comes back. The one we lose our 20% small business deduction. The only thing that stays permanent is the corporate income tax rate. That was permanent in the original bill. So there is going to be something. You're right. If there is a divided Congress, and I say that because if one party sweeps, then especially on the Democratic side, the Republicans don't seem to be as cohesive as the Democrats are on these things. And if the Democrats sweep, I would say, remember, we don't have Kyrsten Sinema, we don't have Joe Manchin to prevent it from happening. And so would the Democrats sweep all these through? Not all of them, but you're going to see a major tax increase. for sure. On the Republican side, would you see the 2017 Act extended? Probably. You'll probably see it. But you're right that otherwise, if it's a divided Congress, we're going to have something in between. We thought we were going to get a divided Congress in 2020, though, remember, and we didn't. So I will not count on a divided Congress.
That erstwhile 2017 Trump Tax Cuts and Jobs Act brought the highest marginal income tax bracket from 39.6% under Obama down to 37%, as I remember it. Some thought Biden would take it back up to 39.6, but he hasn't. It's just stayed at 37. All right, so if Republicans stayed in power, presumably that 37% would go ahead and carry on. You can watch this one next.